All right. So I'm really, 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 really excited about this training. Mike, can you hear me okay? Are you good?
I can. Can you hear me?
Yeah. So guys, I am just absolutely over the moon excited for this training tonight. Mike is a really, really, really good friend of mine. We've known each other over the years, and it's kind of interesting. We've rolled in similar circles, and Mike's been doing financial coaching honestly longer than I have. So it's interesting, right? When you're in business and you have someone who's a direct competitor, I think for a while I was like, I'll kind of like watch what Mike's doing, he'll watch what I'm doing, and it's like we'll try to stay out of each other's lane too much and not steal each other's clients. And then just over the years, I got to know him, and it was really interesting. I really focused in one specific area of the business, and I noticed that Mike was really going all in on this stock thing, this investing thing, and he just kept digging in deeper and deeper, investing tons of money in courses and experience. And I'd see him post all these things about his returns in the stock market, and it's interesting. I like to be fully transparent with everything if I can, and I came from a specific school of thought, and we'll talk about that on today that would say what Mike was doing was really dumb and foolish and risky and irresponsible and and all of these things. So I kind of blew him off, to be perfectly honest with you guys, for many years when it came to this stuff. And there just came a point where I'm like, I don't know everything there is to know. Let me spend a little bit more time learning about what he's learning. And honestly, when I started to really, he started to pull back the curtain for me and show me what he was doing. And we're going to talk about everything and then some on this call. It absolutely blew me away, and I was so impressed. And I said, Mike, we've got to bring you on. We have to get you into our community. So I'm really excited. So Mike Crofts is an absolute incredible investor. We're going to talk about his track record today. We're going to talk about how he did it. We're going to talk about how he built a portfolio from nothing to hundreds and hundreds and hundreds and hundreds and hundreds of thousands of dollars. And we're just excited to be able to teach that to you guys. So Mike, I know you had the presentation squared away. Just know, guys, we're going to do some special giveaways here. But we ain't doing giveaways to the very end for people that ain't on camera and are participating in the chat. So if you want to, I know we're going to give away a $50 gift card today to somebody, or not $50, $50 toward your first investments. If you haven't done it yet, so you can get started today by end of the time, we're going to do that. I also know we did a little bit of a referral challenge for clients. Whoever sent the most people, we're going to give you guys $100. So I'll rely on my team to help me figure that out. But definitely stay to the end. We got some excited stuff, exciting things, and Mike's going to share his favorite dividend here as well to teach
Yeah.
those who stay to the end. So, Mike, I'll let you take it away, my friend, and we're gonna have a lot of good time.
Awesome. Everything's good. You can see my screen.
We can see you. You're looking good.
Awesome. Awesome. So are you, my friend. Well, it's great to be here. Great to be with you guys today. And just to mention that dividend thing we're going to be giving away. It's not like some kind of whatever dividend. This is a dividend that pays over 50% and it pays out monthly. And I'm going to share that with you guys. It's one of my favorite stocks right now. And it pays for my vacations and a whole bunch of things. But we'll dive into that in just a few minutes here. And so, with that being said, I encourage you guys, if you have a spot where you can get pen and paper and take notes, take some notes. This is going to be life changing what we're going to be diving into today. We're going to be talking about how to average 25% plus in annual returns passively investing in the stock market. So this isn't like big
True, Mike.
crypto trading.
It's too good to be true. There's no way that that's possible.
Yeah. Yeah. There's no way until I show you how to do it. Yeah. Many people say that it's not true. It's impossible. The guru was like, you can't do that. But I'm going to walk you through my journey, how I'm doing this. I want to show you guys how to do it as well. Okay. 25% plus passively in the stock market without, crypto and blockchains and all that stuff. None of that stuff. This is buying and holding, as you're going to see today, some of the greatest companies in America. All right, so let's dive in there. A quick disclaimer.
Feel like we need to say too, real quick,
Yeah,
because
go for it.
guys, he didn't say Canada. Just keep that in mind. So Mike is Canadian, so pardon him. Don't make fun of his
Hold,
soul, things like
let
that.
me solidify it for everyone. A. Does that work?
Yep, yep.
A. Okay.
He's officially Canadian.
Yeah.
And just to let you guys know, everything Mike is saying, and I'll stop interrupting here, but I
Yeah.
can honestly say, out of every training we have ever done, this is the one that I'm the most excited about. This, I'm telling you guys, this really is going to blow your mind. So pay close attention. Yeah, Mike, kick it off, baby.
Yeah. And just so everyone's clear, yes, I am Canadian, but this is investing in America and American markets. So everyone that's watching here, that's like, oh my gosh, she's going to bring me into Canada. No, this is all American stuff. I'm American at heart. So Yeah. So let's dive in here. Let me give you guys a quick disclaimer, okay? Just so we're clear on where we're at here. You know, the content we're going to be talking about today is not meant to be taken as personal financial advice, but it's for educational purposes only. I'm not a financial advisor. Jeremy's not a financial advisor. Um, just so you guys know. So, any mention of the securities that we talk about today is not recommended to buy or sell, and you should perform your own due diligence before taking any investment actions. Okay. Now, with that being said, I tell people if they want to follow me and copy me, that is totally cool. And that's how a lot of people get those big returns is just following what I'm doing here. But none of us are licensed professionals, and there's a reason for that. It's not because we don't want to be. I'll talk about that a bit in my story in a little bit here. There's reasons why we decided not to do that. I've had many opportunities to write that license, and there's been some reasons why I decided not to write that. Okay, so we're not financial advisors, or we're not licensed financial advisors, or tax advisors, and so any information of that, or taxes, or strategies, or tax advice here, you should speak with really a qualified professional about your specific situation before acting on any of the strategies we talk about. Okay, but with that being said, I want to share my story, my journey, and how you guys could follow and get similar returns and similar progresses here. Okay. And here's my promise to you guys, all right, is that you're going to get the best 40 minutes you've ever had when it comes to investing. Okay, whether you follow the guys on TV, the gurus on TV, whether you've got a financial advisor, whether you've learned from mom and dad or in school or college or whatever here, the stuff we're going to walk you through today it's going to be very valuable and transformational, is the way I would put it. It's transformed my life completely. And I want to be able to do the same for you guys as well. Okay. So just keep that in mind. And then the last thing here, Jeremy's already talked about, we're doing some giveaways for those that stay till the end. Jeremy's got some things to give away. Plus, I want to share one of my favorite dividend paying stocks that's giving us 50% a year right now. So think about that. If you're investing $10,000, 50% dividend would mean you'd make $5,000 cash. So I'm using this dividend for my lifestyle, for my vacations, all of that stuff. It's buying me right now. And I'm going to share that with you guys.
Just so
Does
you
that
get
sound good?
any misspellings, guys, again, it's like favorite. It's because he's Canadian, guys. Please don't,
Hey,
please.
listen, it may be the way we spell things up here. No,
Yeah.
just playing with you guys. All right, let's dive in here. Let's get things rocking and let's walk through how you guys can start earning 25%. All right. So just so you know, my background, I'm not a Wall Street guru. I didn't grow up in any of that world. Never got into the game of investing, really because of my limiting beliefs. That's where it started here. So I was never in the game of investing. Didn't grow up in Wall Street. Didn't have rich parents to teach me this stuff. If you're like me, you're in a great spot right now, because this is learnable and absolutely doable. All right. So if many of you have had that experience, then guess what? You're in the right spot. I had a lot of scarcity when it came to the stock markets and investing, right? Whether it was news, whether it was families, whether it was our society, or even friends, a lot of scarcity in my circles of influence, which played a huge part into really my story and getting in here. All right. And so for me, my parents, which was my first introduction to investing, they lost a lot of money in the stock market. In fact, they lost quite a bit of money in the oil side of things. They were kind of in the oil boom or the oil, hopefully pump. They were hoping it was a pump, but it was actually an oil dump. And they lost a lot of money and they got out at a loss. They lost a bunch of money in that. And they would always tell me that story, how they lost a bunch of money, with the forewarning to always be cautious. Always be cautious, Mike. You want to keep your money safe. You don't want to lose it. They go back into their story of losing money in the market. All right, so that was my upbringing, just to give you an idea there. Now we're going to fast forward here to 2008. Okay, that's really where my investing journey started, and began here. So in 2008, I married up. All right, if you're married like I am, many of you have probably married up. I married way, way, way up. All right, but it was 2008, and I looked at my bride and said, "Babe, I'm gonna get us I'm gonna work for us to get the best life ever, a life that our parents never had, never gave us. I'm gonna give you the best life ever." And I had no idea how to do it or what to do, but I was also $80,000 in debt. All right. In today's dollars, that's probably like $150,000. It was quite a bit of money back then for what we were doing here. Newlywed, $80,000 in debt. And I'll never forget this. We just moved into a new place that we were living in. It was Saturday morning. I'm sitting on my chair reading scripture. I remember just praying, God, please help me. Please give me wisdom on how to handle money. I want to handle money and manage money well for you. I don't want to be in debt. I don't want to be stressed out. I don't want to be overwhelmed anymore. And I said this little prayer: God, show me a way. I'll do whatever you show me. And I'll do whatever you show me how to do. Okay. Because I was clueless on how money worked and what to do. And so I said that prayer, and as I tell people now, be careful what you pray for because God just may answer your prayers. And He did. He did a little bit down the road here. At the time, I was working as a postal worker, and I lived in Toronto at the time, and I was delivering in like one of the richest areas in Toronto. This was 2008. Now I'm curious, how many people remember 2008 in terms of like the news cycle, the market drops, all that was going on? Was anyone around for that? Anyone remember that? Remember the fear? I see your hands up. Anyone remember the fear that you felt? I remember feeling a ton of fear at the time. I was young, just out of college, newlywed, and I just remember it was all over the news. Markets are dropping. It's like 1929. This is the biggest recession since the Dirty 30s. It was all this negative news. It was like Chicken Little. Was The sky is falling. If you've ever read that book, that's what it felt like. Chicken Little, the sky is falling, right? And I was working in a really rich area here where a lot of people were losing money. In fact, I got a picture here of the market here. 2007 was our top. March 2009 was the bottom. The market dropped 57, almost 60% in a matter of roughly 18 months. Huge, right? And so all these people that I was delivering to, these were millionaires at the time. Today they would be decamillionaires, to give you a comparison. But these were all multimillionaires at the time, and they were losing. And I was hearing a lot about the pain they're in. Think about this: if you had $1 million, by the bottom of 2009, you had $500,000. You were cut in half. If you had $500,000, you were cut down to 250. If you had $100,000, you were cut down to $50,000. It hurt. It sucked. Mom and dad at the time were also losing a ton of money during this time. So there was fear all around this. I had a ton of fear. Again, I didn't know the markets, but talking to all these people, talking to mom and dad, here's what I decided to do. I decided I need to figure out the facts about the stock market so I can start to make good decisions. Right. And when I look back, and when you look back on that chart, and I'll show you some other charts coming up here, the only people who lost in 2008 during that crash were the people who pulled out. Everyone else that held or added in today, man, I look back at 2008 at the top, and to me, that's an opportunity. I was like, I wish I knew what I knew now back then. We'd be multi-deca millionaires today if I knew the information I knew today back in 2008. And so what happened was I saw the opportunity, not the problem. As I started to do some research on the market, and I saw that this was a um, repeatable historical event. It wasn't the first time this happened. It wouldn't be the last. But I decided that I was going to jump into the stock market and start building wealth. Now, again, I was brand new. I was a newbie. I knew a bit of the history. I didn't know how the market fully worked in terms of buying, selling, what to buy, and all that stuff here. So I went out and hired what I thought would be the expert. I hired a financial advisor to invest for me at the time. Right. Again, didn't know anything about money or how money worked or how to make anything happen. I thought I'd hire the experts. Okay, so I started investing in 2008, got in near the bottom there, and started to take it up after that here. And then around that time as well, I started actually touring. For those of you that love music, I toured all around the world. Sometimes we would play in front of thousands or tens of thousands of people, 20,000 people, that type of thing. And it was during that tour. In fact, here's one of our nights in one of the stadiums we were playing at. Um, but during that tour is where God answered my prayer. I found my mentor. He's my best friend today. His name's Chris, and he was one of the artists I was touring with, and he started teaching me about money, how money worked, investing. Now he was a real estate investor. That was his big investing thing, was real estate investing. But he started like just teaching me. So at nighttime we'd play these big stadiums in front of thousands of people. And during the day while we were traveling between venues or cities or had a day off, he would sit there and teach me about investing, what it is, what it isn't, how it all worked, and ultimately start to hold my hand as I start to continue that journey with investing myself here. Right now, back in the day, I still believed my limiting beliefs. They were really strong, right? And one of my big limiting beliefs at the time was there's too much risk in investing. Now I'm curious, Jeremy. I'm gonna ask people to throw this in the chat box. How many people today believe there's too much risk when it comes to investing in the stock market? Just give me like a big R in the chat.
Be honest, people. Be
Just be
honest.
honest. It's all good. I was there myself. Give me a big R if you believe. If you're one of those, or if you have that, that thought. There's too much risk, right? And so my buddy Chris at the time, as he was teaching me about investing, he was teaching me how to change these limiting beliefs that I had, that I grew on growing up here, right? And he started to really challenge them as well here. And anyone that like went through 2008, and anyone that went through 2000 was another huge pullback. Anyone that went through 2008, 2000, there was more in the 90s, there was others in the 80s. They all had this limiting belief that the stock market was too risky. And that's where I learned a lot of it from as well. Again, friends, family, people that had some experience with not doing well in the stock markets. And that's what it built. That's really what happened in my life. And what I came to realize, guys, was yes, there's two risks when it comes to investing and it comes to investing in the stock market. Here's risk number one: investing your money and losing it. That's the big one. That's one that I held on to here. And that's one that a lot of people, especially in 2008, really started to believe that I'm going to invest and lose my money. Or they'll say things like, I don't want to lose my money. So keep things super safe, right? Keep it in a safe portfolio. And that's the first risk in the market. Yes, there's potential to lose money. There's also potential to lose money in your house. There's potential to lose your job and lose money. Like there's potential to lose money anywhere and everywhere. But here's the second risk that comes with the stock market here. And this is a bigger risk, and this is the risk we all need to be very aware of: the risk of outliving your money. And that's a risk that probably about 99.9% of us are going to have in our lifetime, is that we will outlive our money, not lose our money. And this is the second one that you guys really need to worry about and consider here. Because again, most people will get to retirement, they won't have enough. Cost of living has gone up too fast, too high. Anyone that's been around for the last 5, 10 years, you've seen cost of living skyrocket. And so what's happening is we're seeing a whole generation that's outliving their money. They're going back to Walmart to be greeters, and they're having to work, not because they want to, but because they have to. And that's the whole goal of the stock market, is we want to give you choices. If you want to work, great, keep working, but don't do it because you have to do it. So risk number two was one that my buddy Chris started to teach me about. He said, this is the risk you really got to worry about. This is the risk that you're going to have in your life if you do this well. And let me just walk you through here a couple of examples of this, okay? So what happens is people believe the stock market's too risky. They go to their financial advisor, they go to their bank, they say, I don't want to be too risk adverse. So invest in something that's not going to like be too risky. And what happens is they end up investing in things that give them like 4% returns. We call this the safe investing, right? Most banks, a lot of financial advisors will do this for you because they need a job, right? And if you fire them, guess what? They don't make money, right? So they'll keep you in safe investments that, yes, they don't grow huge. Yes, they don't go down huge, but they also don't grow a lot. So you average, you earn 4%. We're going to talk about why in a couple of minutes here, why that's fatal for so many people here. But here's an example of earning 4% over 20 years. If you were to invest $250 a month, it grows to $90,000 after 20 years. I'm going to be honest, that's almost nothing. That's a very low return. I'll give you another example. Most banks will give you 2 to 4%. Most financial advisors will earn you anywhere from 4 to 6%. Well, let's just say you're in 6%. Again, $250 a month, 20 years. That grows to $113,000. It's better, but it's not great. Right? It's not enough. It doesn't grow fast enough. 12% returns. Now, if you anyone that follows the market, you'll know this. The S&P 500, maybe you've heard that term before, it just represents the top 500 companies in America, and it's an ETF that we can trade within the stock market. That averages 10 to 12%. Okay. So again, same example, 20 years at 12%, 250. Hey, we're kind of getting somewhere. That's $250,000. It's better than the banks. It's better than most advisors here. Let me show you one more example here. What if, what if you could do 25% or possibly better? And you could do this safely. And you could do this predictably. Now, most people say, "Back, that's impossible. You can't do that." I've been doing it consistently now for many years, right? And so if you stay with us today, here, I'll show you exactly how that's possible. Okay. It's not impossible, it's actually possible. And it's reasonable without all the risky investing and all of that stuff. Okay. But at 25% over 20 years, $250 a month becomes $1.1 million. How many people here would like to have $1.1 million in 20 years? Yeah. Yeah. I'm going to put two hands up.
And
That's me.
everyone here could drive Uber for a weekend and make 250 bucks a month. So there's no reason why you can't invest 250 bucks a month if you really wanted to.
You could do a garage sale, make 250 bucks a month. Yeah, absolutely. You're absolutely right, Jeremy. Right, 250 bucks. It's not, again, you don't have to be like an already millionaire. You don't have to have a high paying gig. $250 a month. It's money we can all find, right? But that's an example of 4%, 6%, 12% market average, or 25% annually. Now, just so I'm clear, and you guys understand this, when we say 25% annually, what we mean is some years you're going to do 50, some years you're going to do 100%, some years you're going to do 5%. We can't predict where the market's going to go or what it's going to give us. We can navigate it, but if we can average 25%. Right. So last year, for example, the market averaged 26%. I did about 80%. This year so far, I think we're up. Jeremy, we're checking it today. What are we up? Like 13, maybe?
I'll have to look. Yeah, I'm not sure.
Yeah, double check that. I think the market's up like 5% and we're up a little bit higher than that. That's what the market's given us so far this year, but it's about to get better. So I'm not too worried about that. Right. But that's what I'm saying here. If we can average 25 over 20 years. Okay. But also there was three things that I didn't understand that actually changed my entire investing perspective. All right. And here's what they are, guys. Write this down. This matters. This is what's going to help change the perspective for you guys as well. Number one, the stock market always falls faster than it rises. And here's what I mean by that. If you look at the picture here, I've got 2000. Okay. There's 2000 right there. Actually, hold on. Right there. There's 2008. Look at those drops. Those were big drops and they happened really fast. There's 2020. Y'all remember COVID? All that was happening there. Market dropped 40% in a matter of weeks. There's 2022. Big pullbacks. So that was one of my first discoveries is understanding that the market always drops faster than it rises. Here's the good news. The stock market always rises higher than it falls. Write that one down. That's number two. The stock market always rises higher than it falls. And here's that same graph. Look, we got these big pullbacks, but look at these nice big upswings. Another pullback, big upswings. Another big pullback, big upswings. Another pullback, big upswing. Which tells me the market always rises. It's always moving up if you have a long-term perspective. Now, if you're day trading, good luck. The market will move up, down, and all around on you. But if you're a long-term investor, you have hope that long-term you are going to do amazing and you're going to do really well. And then the third thing, write this one down as well. 80% of the time, the stock market is on the rise. Okay. So I went back all the way to 1980 to find this data. And this is the S&P 500, okay? This is how it's performed since 1980. You can see here, we got some red. We got 1981, we were in the red. 1990 was the next year we were in the red. Between 1981 and 1990, we were green every single year. And then from 1990 all the way to 2000, And then 2000 was rough. I'm not going to lie. It was a rough couple years. 3 years in a row, the market did go into the red. That was a rough time for many people. 2008, talked about that already. That was 1 year. 2015 happened again, 2018, and then 2022. Okay. 2024, the market was up roughly about 26%. I don't have that here. And then 2025, as of right now, we're up roughly 5%. So we're in the green for the year so far. So that's rough. Yeah, that's, if you do the math, that's 80% of the time the market is in the green and on the rise. That's good news, because when you know that information, it's powerful. What that does is that allows you to get in and be empowered in making your decisions, to know that even when we have these pullbacks like we've recently had, you're going to be okay. Long term, you're going to do good. Does that make sense so far? Yeah. Awesome. Okay, good. Good. All right, so let's go into the journey here. So in 2008, I started investing. I hired a financial advisor. We invested into mostly mutual funds, some ETFs as well. Okay, that was my journey. We're investing in mutual funds, ETFs. If you don't know what that is, it's just an investment vehicle, is what it is. Okay, ETFs and mutual fund that are supposed to follow the stock market and give you, supposed to give you decent returns. But that's what we were doing. Okay. Now, for the first, here's the funny part. For the first couple of years, I can never beat the stock market. In fact, I can never even match what the stock market was doing. Right? And I had some top companies in my mutual funds, but I was always underperforming. I remember calling my financial advisor, "Hey, why are we underperforming? Like, why am I paying you to underperform the stock market?" I'd ask that question almost every year. The market would go up 10%, I was up 8. Market would go up 15%, I was up 11. Right? And maybe you've had the same experience. Maybe you're like, "Hey, I'm investing, but I'm not doing as good as the market's doing here." And so that was my experience when I first started. All right. And then I had an aha moment. I noticed a pattern. Every mutual fund that I was in had some really good companies in it. We're talking the Apples, the Amazons, the Netflix, had all those like great companies in them. And they were always in their top 10 holdings.
And again, Mike, could you just real quick, what is a mutual fund for those of people that
Yeah.
are clear on
Yeah.
that?
Mutual fund basically is an investment vehicle that holds hundreds, sometimes multi hundreds of companies in it. Right. So it will hold single stocks like Amazon, Netflix, but then it'll hold, hundreds of companies like that. Does that make sense? And then what you do is you put money into that mutual fund every month. And as the market grows, your mutual fund grows, and that's how you make money. Does that make sense? That's like a real basic foundation of mutual funds. Okay. They're managed, meaning you have a financial advisor that manages that fund for you. We call it active management, meaning you shouldn't have to watch it all the time. And the goal is to, if the market goes up, to go up with the market is the goal. So you invest in a whole bunch of funds, a whole bunch of stocks within what we call a mutual fund, and you put money into that. Okay. So that's what the mutual fund was. And all the mutual funds that I owned, I noticed that their top 10 companies that they would hold in that fund were great companies. They were the Amazons, the Apples, the Netflix, the Broadcoms, and a whole slew of other ones. But then the bottom like 100 to 200 funds those mutual funds would hold were garbage. They were underperformers of the stock market, meaning they would drag the fund down. So as these top performers like Amazon would do really well, these bottom performers would drag it down. And that's what was happening. Is all my funds. The reason I couldn't beat the market is I had more funds underperforming the stock market than outperforming the stock market. Right. So that first aha moment came in my brain saying, "Why don't I invest in the top 10, in the top 15, and the top 20?" And that was the light bulb. That was my next transition into starting to build wealth. Was I'm getting out of mutual funds. I'm going to start to buy the companies that are outperforming in the market. Hello, single stock investing. So that's where I started to transition. Now, not fully transition. I still kept my financial advisor, except what I stopped doing is I stopped giving her money And I started taking that money and investing it myself, and I started to buy single stocks. Right. So that all happened in roughly about 2012. So about 4 years after I got into the investing game, I was like, huh, I'm tired of underperforming. A lot of these mutual funds hold great companies. I'm just going to go and buy the great companies. Right. So I said, bye bye mutual funds. Hello stocks. And I continued on this path for a couple of years. Okay. And what I noticed, especially roughly about 2018 is when I started to make the shift. But what I noticed is every year my stocks would outperform my mutual funds. Every year I would outperform my financial advisor. And I was like, how am I outperforming the person that's like went to school, that's paid to grow wealth for me?
Hello.
Hello, right? And in 2018, I realized my advisor could not invest into individual stocks, right?
Even just really
Oh,
tell Mike you just got off the call with your advisor who manages the portfolio. Just
you
tell
want me to tell that story quickly?
real
Okay.
quick.
So I still have one advisor managing one portfolio of mine, not because I can't manage it myself, but because the rules in Canada, it's like it's a 529 plan is what it is. It's Canada's version of 529, and self-managed brokerages don't like to do that here. Now in the U.S. you can, but here you can't. And so I still let him manage that fund for me, but I tell him what to invest it in. And so about a year ago, he called me and said, "Hey, where do you want to put some money?" I gave him a fund to put it in. We just hopped on a call this afternoon. He's a good friend of mine, so we hop on to catch up and stuff. And then he was showing me my account he was managing. We have 10 funds in that account. Guess what fund was outperforming the rest of them? The one that I picked. We in the last year that fund made 30%. Every other fund in that portfolio, the highest fund outside of mine in that portfolio made 15%. Everything else was 15% or less. And I literally like razzled him and said, dude, why am I paying you to give you the funds that I know I should be in to outperform everything you're giving me? I was just playing with him, joking with him. But yeah, that happened today. But that's the only account he has. Everything else I'm investing myself now. So in 2018, what I realized was two things. One, this specific financial advisor charged a lot of money to invest into single stocks. So every time I wanted to get in and buy a single stock, he charged me $125. Now that wasn't him being greedy. His brokerage said he had to charge it. They charged it to him, and he's like, I just got to pass on the costs. I was like, I totally get it. But listen to this. Like, if you had to pay $125 every single time you want to invest into like Apple or Amazon, like you're going to make no money. It's too high, right? Too high of a fee. And that's what a lot of financial advisors would charge. Banks charge as well. They charge a little bit less, right? But they were still charging as well. So in 2018, I realized it was going to cost me a lot of money to continue to use a financial advisor to invest into the stuff that I knew was going to outperform the market long term. And then I realized this as well. Not every advisor has a license to buy and sell single stocks for their clients, which is another reason why most people don't get, why most advisors won't buy you single stocks because they aren't even licensed to do it, right? So you either worked with an advisor who wasn't licensed or an advisor who was going to charge you $125 every time you wanted to buy or sell in the market. To me, that's insane. Like, think about it this way: if you buy $100 stock, your stock would have to go to $225 just to break even on your fees. Your stock would have to go up over 100% to break even on your fees. I call that stupid on steroids. That's just bad financial management, which is why most financial advisors won't put you in single stocks, like I said earlier. That's why they keep you in mutual funds that underperform the market, right? So you're either paying a hefty fee to invest in stocks, or you're working with an advisor who can't do that, who's putting you in, again, mutual funds, ETFs, that type of stuff. And I just said, that's not for me. I want to be an outperformer. I want to accumulate a lot of wealth so we can give it away. We can bless people. We can just be world changers. And it wasn't going to happen with a financial advisor or in mutual funds. I was consistently outperforming my financial advisor. Okay. At this point, I had consistently beat them. And as we saw today, still beating them. Right. But I was doing better than the expert. I was like, how am I doing better than the expert on the stuff that I had bought so far? but that was the truth. We were outperforming our financial, or I was outperforming the financial advisor. Big name financial gurus at the time were telling me not to invest into single stocks. Again, too risky. You know, the bottom could fall out. But I'm like, if the bottom falls out, mutual funds are gonna drop too. Like, it didn't make sense to me. But a lot of the gurus were saying, don't do single stock investing. It's not gonna work, right? And at the time, I was doing financial coaching, like Jeremy was talking about earlier. And a client reached out to me and he's like, hey, can you help me build some wealth? I want to buy a house in a couple years and I need some help, building some wealth. Okay. And so I was like, okay, not a problem. What was really embarrassing at the time is when I told him to pull up his investments, it turns out he was doing better than I was when it came to the mutual funds. Like I still had some mutual funds at the time, and it turns out his stocks were doing better than my mutual funds. Right? I was like, oh, this isn't good. You're doing better than me. Yeah, I'm the guy that's supposed to coach you. Right. And so after getting to their finances, I saw that he was doing single stocks as well. And his investments were earning 28%, 30%, 20% year over year. And I realized he knew more about wealth building than I did. And it was time to change. Again, for the longest time, my goal was to earn just 10 to 12% because that's what the market average. If I could just average the market, I would do okay. And yeah, you could do okay. The problem is, and I'm going to show you this in a couple of minutes, it may take too long for you to do just okay. Right. So that was my goal to earn 10 to 12%. I meet this client who's earning 20, 25, 30%. And I'm like, whoa, I need to start doing more of that. And I got rid of the limiting belief that I thought it was too risky to invest in single stocks. That was when that belief got shedded as well, because I saw the returns, I saw what was going on, and it was time to get rid of the limiting belief that single stocks were too risky. Because the truth is, they actually weren't. And that's when I started to earn 25% year over year. In fact, more than 25%. And I'll show you guys that in just a couple minutes here, but start to earn that 25% on average. Okay. Now, there are funds and there's companies that have amazing 5, 10, 15-year track records, right? So I went back to all those gurus that said, you can't do single stock investing, it's too risky. And I started to study these companies over 5, 10, 15, 20, 25, 30, 40 years. And what I realized is, yeah, there's risk. The risk is investing in companies that aren't doing great. But there's very little risk investing in great companies that give you great returns that continue to grow and return to the American economy, right? And so, what I want to do, guys, I want to share with you 4 examples of stocks that I started investing in that have averaged 25% annually or more. Yeah, they've done 25% or more for the last 20 years. You guys ready for these?
I don't know, Mike. I can't tell. Who's ready? Who wants to see him?
I can't tell.
Think we should
Give
end the
me a
call.
head shake. Give me a
Woo,
head
woo,
nod or
woo,
something.
woo. Yeah, I think we should end the call now. I think that was a great training. That was good. Thanks, Mike.
All right, see you guys later.
Yep.
I'm joking. Let me give you the companies, okay? These are companies that I've been investing in, that I currently invest in, that are great companies. But before we get there here, let me just compare to you. This is the S&P 500. For those of you that don't know what that is, like I said earlier, it's the top 500 companies in the United States of America. And this is how we kind of judge the stock market, with how well the S&P 500 does. Okay? And so again, since 2008, okay, you can see that there, 2008, we've averaged roughly about 10.77%. So with the dividend reinvested, you're probably about 11% since 2008. Again, it's okay, but it's not great. And I think if you're on this call today, it's because you want to be great. So let's dive into a couple of them. You're going to know, I guarantee you'll know 3 out of these 4 companies. Okay, here we go. Number 1. Does anyone know this company? How many of us currently have an iPhone? Yeah. Or an iWatch. I'm on my Apple computer right now, or maybe we stream Apple iTunes, Apple Music, all that stuff. That's what this company does. Since 2008, okay, it has averaged 23.15%. Now, if you add in the dividend, you're roughly about 24-ish percent. Okay. If you add in that dividend, you would be about roughly 24%.
Dividend, Mike, for everyone who's not sure, just 10
Yeah,
seconds.
that's a great question. Dividend, guys, is what companies pay you to own their stock. So when companies have a whole bunch of cash and they don't know what to do with it, they issue what they call a dividend. And basically, what it means is for every stock you own, they pay you money. For Apple, it's every quarter they pay you money. So, usually 0.5%, 1%, sometimes 2, 3% of what you own gets paid back to you in a dividend. You can reinvest it and buy more Apple stock, or you can take it as cash and go have fun. But that's what a dividend is. It's a company paying you money because they have a whole bunch of extra cash. They don't know what to do with it. Okay, is what they do here. So there's Apple. There's the chart of Apple. I'm going all the way back down to 2008 right here. If you're on your phone, you might not be able to see that, but that's 2008, and this is where they are as of today. Okay, but you can see there's fluctuations. We've had pullbacks. Absolutely, we've had pullbacks. But long term, we move up and to the right, and that's what we want here, up and to the right kind of companies. Okay, so that's number one. Here's another one. I guarantee you guys know this one. You ready for this one? Amazon. Who uses Amazon? Who has Prime? Oh, yeah, yeah. I think we all do. Prime, Amazon Music's another one. If you're in business, maybe you're on the business side of Amazon in terms of their security and all that stuff that they do here. But Amazon, since 2008, has averaged 25.78%.
See, now whenever you buy stuff from Amazon, you can tell your spouse that you're doing market research on the company you're investing in. Okay, guys?
I love it. Exactly. What are we doing, honey? I'm investing. I want my company to grow. I got to buy some products from them. Okay, but there's Amazon, and there's the chart for Amazon again, going back to 2008 right there, all the way up to current day. Yeah, we've had some big pullbacks. And here's the best part, guys. In these big pullbacks, when you buy, and this is what we've done, we bought a whole bunch near the bottom. You don't get 25% returns. You get like 30, 40, 50% returns in the next couple of years because of all the growth it gives you coming back up to all-time highs. So this is another way we outperform the market. So if a company's doing 20, 25, and we buy these little dips way down here or over here or over here, in the short term, you could easily earn 30, 40, 50, 100%. That adds to your overall annual returns. Okay, so that's a little secret that we have here that we use to do better than 25%. Here's the next one. Some of you may know this, some of you may not know this. It's a company called Broadcom. Okay. They're in the chip space and they do a couple other things. I love these guys. Man, these guys have like kicked ass. They've taken names. Sorry, I swore. And they're chewing bubblegum here. Since 2009, they've done 39.65%. With the dividend, they've done 40% year over year returns. There's a chart right there. It's diabolical. It's just going up, 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 up. These guys are an amazing company.
And
Okay.
Mike, someone asked a good question too. I know and guys, this train's gonna go a little bit longer, but it's for good reason here, so we won't be able to end right at the hour. But trust me, pay attention. Someone was asking, what about dollar cost averaging? Where you're just going to be consistent dip investing actively. And I know what you would say about that, but just in a 10 seconds, what would you say?
In 10 seconds, it can work in the right companies. It doesn't work for all companies.
So dollar
Some
cost
companies,
is just when you're consistently. You want to explain that real quick to everybody,
yeah,
and then
dollar cost averaging, for those that don't know, is just every month you put money in no matter where the stock is. So if the stock's at all time highs, you put money in. As the stock comes down, you continue to put money into it. And what you're doing is you're dollar cost averaging down because you buy high and you buy low. It brings your dollar cost average down a bit. And so that's what that is where you're buying every single month, regardless of where the price is. And we call that dollar cost averaging. And over time in good companies, it can work. Here's where it doesn't work. Sears, where people call dollar cost average themselves out of the market. The company went bankrupt.
Mhm.
And so you got to be careful what company you do that with. And yeah, because if you do it to the wrong company, and they go bankrupt, you're gonna lose a bunch of money that way too. So it can work. It just depends on the right company.
But just so everyone knows, like, guys, hang tight because we're gonna get to. We're not. That's not exactly what we're talking about here. We're gonna show you how you can intelligently do this in a safe
Yeah,
way. So keep going.
yeah. Yeah, we'll walk you through that here in just a sec here. All right, the
Actually,
next company. I thought I heard a question. No? Okay.
you're good. Just keep going. You're good.
Okay, good, good. Next company, we all know who this company is. Netflix. Since 2008 has averaged 39.12%. That's another 40 percenter year over year 2008. Okay. And there's their chart right there. So big pullbacks. Even with these big pullbacks, they still managed to average 48%. Okay. Now here is the S&P 500. Okay. This is what the S&P 500 has done during that same time frame. Okay. 2008. Here's each of those companies compared to the S&P 500. Now, what you won't be able to see at the very bottom here is that S&P 500 chart I just showed you in the previous slide. Right here, when you compare them to the great performers and these top performing companies, it looks flat, doesn't it? And these are the four companies I just walked you through: Netflix, Broadcom, Amazon, and Apple, compared to the S&P 500. So these companies completely crush the S&P 500. And the question I ask you guys is, what if you start investing into companies like this and others? There's so many others. There's not just, I'm giving you four for the sake of time, but we've got 20, 30. We've got a bunch that do and outperform like these companies do,
And we're gonna show
right?
you at the end, guys. Don't worry. We're not holding back anything.
Yeah, we're going to give it all to you. And you may ask, and I think I've already given the answer, but why doesn't my financial advisor just buy these for me? They often don't have access to this type of investing. They're regulated. And they say they put so they what they do is they put you into, like I said earlier, mutual funds and those types of underperforming investments, right? And they don't have a way to make money. If they were to buy single stocks for you, they would have to charge you like some sort of fee because they don't make money off of single stock growth,
Yeah,
right? So they put you in
they
mutual funds for
don't,
that reason.
and they don't study the markets like you do, Mike. I mean,
No,
the majority of them aren't spending as much time as you are. They're learning how to sell packages.
that's
That's
how
what
they're raised, and then that's part of the reason why I never got my license. Is we're like when I was going through all that training and stuff, we're taught how to sell mutual funds, not how to invest and grow wealth for you. Mutual funds make the brokerage a lot of money, but they don't make you a lot of money, right? So that was one of my convictions for not wanting to go and get licensed and go down that road. Okay. So what happened is after all this, I told myself, let's just go all in on this sell investing. Let's go buy the best of the best. Let's study them, continue to grow, continue to make sure they're growing. And as long as they're growing, we're going to continue to do really, really well. And that's when my investment account significantly started to grow. That's when we started doing 30, 40. Last year we did 80%. 2023 we did 80%. 2022 we were out for that huge pullback. We still did well. We got in near the end of 2022. But that's when we started really outperforming the market. This is when we got into this style of investing and got rid of the ETFs, or most of the ETFs, got rid of the mutual funds completely, and went out on my own. Okay. Now let me teach you something. Okay, if you have a financial advisor, if you got financial records in front of you, you could use what I'm about to teach you guys to find out what type of returns you're getting and how far those returns are going to go for you. Okay, it's called the rule of 72. Okay, the
who
rule
knows
of 72 tells you.
about it
Sorry,
already? The
go for it,
chat.
Jer. What are we going to say?
I say, who knows about it? If you know about the rule of 72, let us know in the chat. Or if you don't know, let us know. Do you know it? Do you not know it? You're about to learn. It's going to be life changing.
I see some hands up.
Here we go.
I like it. I just want to say this, guys, before I move on. I'm not here to knock financial advisors at all. This isn't a knock against them or the banks. This is just to say there's a better way when you take things into your own control. Okay, and start to do things on your own here. But I got a lot of respect for that industry and what they're doing here. They work really hard. Okay, so let's dive into the rule 72. This is basically how long it takes for your money to double. So what you do is you take 72 divided by your return rate, and that tells you how many years it's going to take for your money to double. So, for example, let's just say you're earning 12%. 72 divided by 12 tells me every 6 years my money should double. Now let's do a quick. Can you guys help me out here? Anyone have a calculator? Can we
Let's
do
do
a quick thing?
see who can do their best math in their head or in their
I want you to hop on the mic quickly. Is that Karen? I see Karen. Do you want to hop on the mic quickly? Pull up your phone. Okay, I need some help with this math here. Okay, so here's what we do. Rule of 72. So if you take 72, most people will work from 25 to 65. They got 40 years where they're going to work, save, and all that stuff here. Now, if your money doubles, let's just say you're earning 12%, your money doubles every 6 years or so. From age 25 to 65, that's going to give you roughly about six doubles. Karen, you ready?
I'm ready.
Okay, put $10,000 in your calculator.
Yeah.
Okay, I want you to times it by two.
Yeah.
What's the number?
20,000
20,000. Okay, give me another two now.
times two again.
Yeah.
40,000
All right, give me another two.
times two. 80,000.
Okay, so you're now roughly about 20 years into your working lifetime. Your money's doubled three times. $80,000. Give me another two.
160.
Okay, give me another two.
320.
And one more two.
640.
Okay, so if you're earning 12% over 40 years, $10,000 becomes roughly about 640, give or take. Okay. But what if you got, I don't know, let's just say you're earning 20%. That means your money's going to double every 3.6 years. Again, over that 40-year time frame. Let me just put the math in here quickly. You're going to get 11 doubles.
Wow.
Okay, you ready, Karen? Do you have that number still in your calculator?
I'll put it back in. 640.
Okay,
Okay.
put that back in. We've got six doubles. Let's do another double.
1.28 million.
Okay, let's do another double.
2.56 million.
Let's do another double.
5.12 million.
All right, we got two more. Let's do another double.
10.24 million.
All right, we got one more here. Give me one more double.
20,480,000.
In the same time frame, if you can just earn better interest, if you can just earn a higher interest rate, you go from what? What were we at? 640, you said? It's 640 to what did we end up? 20 million?
20,480,000.
Who here wants to do better on their interest rate return? Would you rather earn 12% or 20? Yeah. Yeah, I'm
20.
going 20 here. So the rule of 72, compound interest is what it gives us. It tells us how fast things are going to double. I call it the eighth wonder of the world. Right? Here's the problem. Most people average 6% or less. In fact, a study came out that studied the S&P 5 people investing, self-directed investors over 20 years. They found that they underperformed the stock market by 6%. So if the stock market averages 12, you're averaging 6. That 6% rate of return, you don't even get there. You don't have enough time, meaning their money isn't growing fast enough. So if you can change your rate of return from 6 to 12, from 12 to 20, from 20 to 25, dare I say from 25 to 40 maybe, you now what I call a collapsing time frames. You now collapse the time frame it takes for you to build wealth. It happens so much faster. So let me ask you guys, how many of you would be interested in learning how I've done more than 25% year over year? Yeah. Okay. So what I just shared with you guys is what we call single stock investing. It's buy and hold. It's buying when things come down. It's buying when things go up. It's great. I do it all the time. It's an amazing way to grow some wealth. And as you saw earlier, you don't need a lot of money. 250 a month gets you there. You can do it at $100 a month, $50 a month. You don't need to put tens of thousands of dollars to make this happen, especially if you're earning, again, that 20, 25, 30% style of returns. Now, Jared, what do you want me to say about this?
I just really wanted to show you guys what was possible. So this is what I think is really amazing, because obviously I was impressed enough with Mike from a buy and hold How many, by the way, how many of you so far like massively impressed by this man's wisdom that God has given him, right? This guy has studied his butt off. He spent a lot of time geeking out behind computer screens, right, in the middle of the night, while everyone else was watching Netflix, getting their share value up, right? But anyways, I just was already impressed, and that was enough. But then we start talking about some of the other things that he's been involved in, ETF trading, options, different things like that. So when we were talking about the ETF trading, he's like, "Yeah, I only trade one ETF." And I'm like, "Tell me more." And I said, "Well, what has been your performance over the last 6 years since you've been doing it?" And he was so humble about it. And not, I mean, Mike is, hopefully you guys can tell by now, Mike is an incredibly down to earth, humble person, almost to the point where you have no idea that this guy is so awesome. And so I just kept asking him, like, "Well, tell me more. Like, show me your trading journal, show me the record."
Yeah.
And we average it out, show him just year by year, real quick. Like, this is
Okay.
what over the last 6 years. So we're not going to talk about ETF trading on this call. This is what we're talking about today is we're trying to get everybody in on at least believing in I should have a portfolio that maybe 20, 25 great performing stocks. This is how I want to start. Like, get some really solid buy and hold, consistent growth. How many of you guys are at least like, I'm starting here? Like, I'm pretty sold. I at least want to start doing this kind of investing. Great. And we're going to show you how to do it super passively, where you can literally copy exactly what Mike is doing if you want to do it. But I was like, how many of you guys are like, I would love to be able to take it a step further? Like, I would love to multiply my money to the 50% return, 100% return, 150. And again, we're not promising that. We're just literally, all we're doing is just showing you this is somebody that has done it. Now, there's going to be some of you who are skeptics. I'm like, well, that's impossible. You can't do that. If that's it,
Yeah.
it's just the numbers.
Okay.
There's lots of people doing it. So just real quick, take like a minute, just like show them real quick, like what your
Yeah.
performance has been like just trading ETFs. It's super simple.
Yeah. Trade, and then that's the keyword trading. ETF. So what I just walked you guys
Trading
through
on
was
this
our
call.
buy and
I just want
hold
a quick,
stuff.
like, yeah, just show people what's possible because some of you
Okay.
guys are using the calculator and you're like, I need to get better returns. And so this
Yeah.
requires increase, this requires more knowledge. We're not going to talk about this. We're not even offering this month. This will be kind of a part two thing on our next time. But for now, I just want to give a quick sneak peek of
All
what's
right. All right. Here we go. 20 and 19, 144%. I did 8 trades total, 7 wins, 1 loss, 144%. 2020, which COVID, guys, remember that was the year the market dropped 45-ish%. I did 293% that year. Actually, the more volatile the market is, the better I tend to do for this style of investing, this style of trading. 10 wins, 2 losses that year. 2021, 106%. Okay, 9 winners, 2 losers again. I don't win every single time. That's okay. 2022, 36%. You might be saying, well, Mike, why are you so low in 2022? Well, for 10 months of the year, the market did this for 10 months straight, and the market dropped roughly about 20 ish, 25%. So when you factor it in, I net the market 60 ish, 55, 60% above what the market did. That was a hard year. There just wasn't a lot going on. You can see here, I did 3 trades. That was it that year. I had to sit on my hands most of that year. 2023, 181%. 2024, 100%. So that was last year. And then if you add it all up, if you total it all together, we've averaged about 143% annualized.
hello. So
Hello. Yeah.
anyways, just want to encourage you guys. I think really part of why we're doing this is because how many of you, just by a show of hands or in the chat, let us know if you've been scammed or ripped off by some kind of ridiculous investing thing in the last few years, okay? Right? There's a lot of junk out there, and we vet people very carefully if we're going to have someone come in, if we're going to teach. But this is when you have someone like Mike who loves Jesus, he believes the Bible, he believes us, he's lying to people, he's going to hell. We're not we're not getting, no, we just do. I mean, like that's the same
Yeah.
that we hold by. It's like we're not going to
Yeah.
fudge numbers. And so,
Yeah. Yeah.
I pressed him. I'm like, bro, show me everything, and it's just this is what it is. So you
Yeah.
guys kind of think that we're, just completely lying and or this is real. And if it's real and it's possible, we're not guaranteeing it. We're not telling you it's going to be, but if it's possible, guys, this is life-changing amount of returns for some
Yeah.
of you. Some of you are in the chat are like, well, how do I do this if I'm 60 and I have not? This is
Oh,
ways that you can do that. Even just on the buy and hold side, there's hope. But if you could learn skills like this, it will absolutely transform your life.
yeah. Absolutely here. And it just takes time, right? Like, you know my story. 2008, it's 2025. It was a journey. But the cool part is when you have the right mentor in your side, you can collapse time frames and learn a lot faster than on your own. Okay. Um, the number one limiting belief from you getting into the game. Okay, that's keeping you from getting into the game. And this is what I hear most people say right here. I don't know enough to make an informed decision. And I get it, and most people don't. Most people don't have the emotional tolerance to manage to get into the market and manage the ups and downs, right? But with the right mentor, okay, and that's our job at the Kingdom Wealth Investors Club here is to educate you, equip you to make informed decisions. Okay, to make the right buys, hold the right companies, hold through all the noise and the garbage going on. Yes, Trump's in power. And by the way, Trump got in, tariffs went into the market. I don't know if you've noticed, every time he talks tariffs, we either go way up or we go way down. You know what this is like? I'm honest to God. You know what this is like? His first term. You go back into the market and look back into 20, his first term was 2018, I believe, right? Yeah, 2018. The market for the first 90 days has done the exact same thing we're doing in 2025. So I knew the turnaround was coming because I saw it in 2018. Right? But the same thing's happening, right? And so you got guys like me who are in there, who know the market, who know the history, who understand the political environment, and know the companies that are going to win and the ones that are probably going to lose here. And we stay in the winning companies, not the losing ones. Okay. And so our goal here is really that. Do you want to take it from here? Do you want to talk about the pie?
Yeah, okay. So
Yeah, go
based
for
on
it.
what we've shared, based off of what we've actually go to the well, yeah, hold on, keep the slides up for a second.
Okay.
I want to see everyone's faces. Okay. So, based on what we've shared so far, how many of you guys would say, you know what? If you then said, hey, we're going to roll out this program that's going to allow you to copy what Mike's doing, showing you how to get similar returns, you could easily charge tens of thousands of dollars for this. How many of you guys are convinced at this point, seeing the numbers, the power of compound interest, that like you could probably do that and be fine? Okay. Well, guess what? We ain't going to do that. You're about to be blown away. Blown away.
Something better than that.
So we're going to this is by far the most compelling, no-brainer, blow your mind offer we have ever done. Okay? So just what I'm about to show you guys, just hold on. So this is not, we're not going to charge a crazy amount of money. Now, if we're going to teach you guys trading, we're going to, and this, that is a part two of we're going to talk about later next month. Obviously, it requires a lot more hand holding, one-on-one support, things like this. But we are going to show you guys right now in a second a way that you can literally copy and paste Mike's portfolio and you're not going to have to pay hundreds of dollars a month. You're not even going to have to pay thousands of dollars a month. How many of you are excited about that? It's crazy. And I'm excited, guys. This is technology that is newer over the last
Yeah.
couple. This is not something that's ever been made available to people. Your advisors are not going to tell you about this because they're not going to make any money off this. It's just, anyways, there's so much that we could talk about here. Anyways, so by the way, if you're already a current client, also, if you're already a current client, you don't have to pay anything for this. We're going to give you this for free. If you're an active client, you're in some form of a membership or something with us, that if you want to get on membership with us and you want to be more involved with our coaching, we're going to throw this in just as a part of it. And it's absolutely incredible the value. Real quick, Mike, do you want to show though, just the screen? I'll show you guys the pie and how we break it up.
Yeah.
Yeah, show them. It's
Um,
just an example of like, so this is what the S&P's done since January of 2024. Okay,
yeah,
average
not bad.
no, 20. No, that's not right, is it? 20. No,
Yeah.
no, no.
Yeah. Jan 24 to you have
Okay.
it till
You're right.
May.
There we go. I was like, total wasn't 24%. Okay, 17%. Okay.
Yeah.
And then we're looking at the mix that Mike picked for this so far that we've got
There we
in here.
go.
And we're at 102%. Now, again, we're not making guarantees, guys. We have to have so many disclaimers around this. This is why most people probably would never offer this, is because they don't want to have to go through the rigmarole legally of talking about this. And what if someone takes this and goes stupid with it? So just keep in mind, like we're placing a lot of trust and common sense into everyone here to say, hey, listen, we are not making promises with any of these. We are not saying you're going to get the same results. But we're literally giving you the exact same pie that Mike is investing in. So let me screen share with you guys and show you how this is going to work. So just so you guys know, anybody who's a current client with us, who's active, whether that's any one of our programs, you're active paying member, you're going to get access to this for free. Our lowest level membership is Kingdom Cash Flow Academy. It's only $97 a month. We'll give you guys a link in that for a second, okay? But let me just show you this, okay? So this is the pie. So you just kind of see how this works. So this is with a software called M1, okay? M1 is a custodian. It's just like Vanguard or Schwab or Fidelity, anywhere where you put your money. We actually have a new training that's in our modules. It should be there now. It's about how to set up your emergency fund with M1. They actually have a 4% high yield savings account with their emergency fund. So you have a training for that. So we have a training on how to set up your high yield savings account with M1. And we also are going to be rolling out trainings next week so that going into June, you guys can all access this pie. You can set up we would encourage everyone to start with most likely a Roth IRA would be the best fit for you in terms of what you're going to open up. But just to give you an example, we're just, guys, there's nothing mysterious here. Okay. We're not like, there's no, we're making super things complicated. You can see all the stocks here. We've got Broadcom, like Mike was just talking about. We've got Meta, we've got Spotify, we've got Rollins. So if you're wondering, how did you decide on these? Why these companies? Mike, just explain, because guys, obviously there's thousands of companies, right? That we
Yeah.
could be looking at, but why these 25? Why did we pick these? And just so you guys know, this is going to be something that we update every single month. So you're going to want to stay here because we're changing these allocations. There's going to be things that might happen in the market where maybe we need to move into some more recessionary sort of
Yeah.
hold. So this isn't going to be a static thing. This is going to be something that you're going to want to stay on subscription for so that you can get the latest and greatest stuff. You're like, Jeremy, that's really good business, a really good. Yeah, it is. But honestly, guys, here's what's great about business is when we can give you guys 100 times, 1,000 times the value of what you're paying us, we believe that everything will be taken care of for us personally. So we just wanted to create something that is truly transformational, a ridiculous amount of value. I mean, I've got a whole calculator I can show you. If you looked at how much you're paying in expense ratios, advisor fees, all these things, in the traditional investing that you're doing. Plus, you just take into consideration the fact that most of you are probably getting 6%, maybe 8, 10, 12 if you're doing really, really well. It's an absolute no-brainer when you look at over time. I mean, not just tens of thousands, but potentially hundreds of thousands, maybe even millions or tens of millions in terms of what kind of returns you can get. So yeah, you could just see that. But yeah, Mike, why these companies? Why did you pick these?
Yeah.
And
Yeah.
everyone's gonna get this, okay?
Yeah, let me just piggyback on what you said there. Yeah, you said there's a fee and all that involved. For the majority of you, the fee is going to be less than what you're paying a financial advisor or a bank. The return is going to be higher. And then also, what I've noticed is most financial advisors won't even take you on unless you've got six figures to invest. So
Very
this
true.
this works if you got six figures, if you got $500, if you're starting with zero, this will work for you, which most advisors again won't do there. So those companies, just to give you an idea why I picked them, the majority of them are growing companies right now, and that's what we invest in. So my criteria is a couple things. One, you've got to be an outperformer of the market long term before I'll even consider investing in you. You have to prove that you've been a market outperformer. Two, you got to be a market grower, meaning earnings call over earnings call, and that's the work that I do for you guys. Is I got to see growth and continued future growth. So that's the second criteria you get, and then three, good companies. Companies that are adding value to our economy, adding value to people, companies that if they disappeared for us, we would miss them gravely.
Like waste management, that's one of the picks in there. How many of you
Yes.
management, right? Imagine if waste management went bankrupt tomorrow and they were no longer in business.
Oh, that would suck.
How many of you guys are like, man, I would hate driving to the dump? That's like that's ugh, I would hate that. So
Yeah.
that's just one example, guys. These are healthy, predictable. I shouldn't. I mean, you could say predictable, but in the sense that like these are companies that have a very, very long track record. And again, the chances of an Amazon just you wake up tomorrow and I mean, honestly, guys, the reason we're talking about this is because I don't even know where I got this. I don't know if it was from movies or television, but literally for most of my life, I had this fear of like I could just wake up tomorrow and Amazon is bankrupt and I have no and I just lost all my money, right? It's like what are the odds of that if you're smart, right? Like how does a company like that just overnight go out of business? So where Mike has done a ton of research so that you guys don't have to, because how many of you guys are like, thank God I don't want to have to spend thousands of hours studying the markets and reading charts and watching news and, and doing all these things. So we're going to do that
Yeah.
by we, I mean Mike, so that you guys don't have to do that. And then again, if you guys want to do the trading stuff, you're like, Jeremy, why aren't you talking about that? I'm not trying to sell you guys on that today. We're not even getting to that. We'll talk about that later if those of you who want it. But this is literally just to get you in the door. And the reason we're doing that too intentionally is I know that if I put a link on here right now, a lot of you guys would sign up for the training and it's going to be much more than what this is. But I'm not doing that because I want you guys to get your priorities straight. Okay. I want you to get started, get into some things that are a little more safe, a little more predictable. Get in the game, get your Roth IRA started, get your with some of these funds, get comfortable. And then eventually, once you got your feet wet with that, now we can look at how can we go into something a little bit more aggressive. Does that make sense, everybody?
Yeah.
Yeah, Mike.
Yeah. And just to piggyback, Jer, most financial people will tell you for every stock you own, it takes about an hour a month of research and maintenance to manage that stock. So you think of this one, 25 stocks, that's 25 hours a month. No one's got time for that unless you're doing this full time, right? And so that's what we're doing for you guys. That's the work we're going to do for you guys so that you can just put your money in, buy, get the returns we're getting. We don't know where the market's going to go into the future, but that's okay. And the cool thing about this, like Jared said, every month I'm going to be adjusting, we'll add in, we'll change the percentage mix based off the opportunities that we see at the time in the stock market.
I'm
So if
also
we
in the
see
meeting
big,
showing you guys why we did what we did, why he
yeah,
made the. We're not just, this isn't going to be mysterious and things like that. And over time, like we'll equip you guys with more tools to know how to be able to think like Mike and do that. But again, guys, our one of our bigger philosophies here, Mike will get to the slide in a second, but it's just Proverbs 13:20. Whoever walks the wise becomes wise. Like it's biblically speaking, if you want great results in your life, don't try to just pull yourself up by your own bootstraps and figure it out on your own. Okay. Just follow somebody that has worked really hard to be the best at what they do, whether that's in fitness, whether that's in finances, whether that's in marriage, whatever it is, and just follow in their steps. That's what discipleship is. So we're trying to this is stock discipleship 101. So
yeah.
great.
Yeah, so let me just recap for you. I think what you've probably covered mostly here is we'll come in monthly and make adjustments to the
Just so
pie to optimize your return.
just so you know, like you guys can buy fractional shares. You don't have to like the way
Yeah.
that M allows you to do that. You can have a little tiny piece. You don't have to buy a full share of Netflix or a full share of Apple or whatever that is at the time. So yeah, you'll see that in a second.
Yeah, that's what my kids do, by the way. If you have kids, bring your kids along for the journey. My kids, I've got 1-year-old to 12. My 12-year-old's been investing $15 a month since she was 8. Listen, Tesla's a $300+ stock today. She ain't buying Tesla for $15, but we buy fractional shares, and that's how we get those great returns for our kids. She's going to be so wealthy that I've actually got to teach her how to not let money ruin her. That's how much money she's going to have one day. But your kids can be along for the journey as well. All
Well,
right.
Mike, Mike even showed, sorry, as I was coughing. Mike has a whole separate training on this, like
Oh
in the
yeah.
make you rich. And if you put $100, right, $100, you could probably pull it up real quick, Mike. But if you put a
Want me
hundred,
to pull it up? Yeah.
that's fine. If you put $100 into a fund and or stock, whatever it is, and it's getting you 34% from day one, right? And you go from 0 to 65 and you never added another $100, pop in the chat. How much do you guys think that would amount to by the time your kid is 65 or your grandkid? Put $100. That's it. Don't add any more. Don't do anything else. What do you think if you could do 34%? Don't no additional contribution, 10 million. Hold on, keep guessing. Let me see some more guesses. Guys, this will give you so much hope, everybody. I'm doing this because of hope. It's brought me to like I'm in tears because it has brought me I have so much hope for everybody after trainings like this. You're not too old, you're not too dumb, you're not too late, you're not too whatever. You can do this. 5 million, 20 million, 2 million. You guys are about to have your minds
Are you
blown.
ready? 18 million.
No, wait, no, that's not million. That's billion, right?
Is it a billion? Is that billion? Oh,
Yeah, billion.
there you go.
That's 18 billion.
Sorry, I
Yeah.
read that wrong. $100 compound at 34%. Now this is for example, my son, we did $100 when he was born into Nvidia. That's average 30. I think they're 36 since 2000 ish. I have to double check that. Don't quote me on that. No, will they continue to do that? I don't know, but that's what I do. That's the work I do is monitor. And if they don't, they continue to change. We'll go find a company that does do that so the money can continue to grow. That's what that looks like.
Yeah, and so just to make it clear how this works, guys, with the pie is every month we go in there, we update the pie. It'll be in the membership site as if assuming you're still a member, and you'll get access to it. It's literally copy and paste. You go add this pie to my portfolio. It's really simple. There's going to be really simple instructions on how to do this. And we're going to be rolling this out next week. So guys, just don't overthink it. No, it's really simple. This should literally take you less than 3 minutes a month. How many of you can dedicate 3 minutes a month to learn how to become a millionaire doing this kind of investing? Okay. Does this make sense? Are you guys like, does this feel, please let me know in the comments. Does this still feel elusive and mysterious? Because my goal with Mike was to demystify. I know this training went long, but we put so many slides in here and I told him, we nerded out, guys. We've spent hours and hours and hours and hours and hours and hours and hours building this presentation over the last week or two.
Yeah.
I wanted to demystify it for you guys. Does this all making sense? I wanted this to not be so intimidating because I remember guys, I'm the janitor 12 years ago. So I didn't grow
Yeah.
up with money. When I say Mike, explain dividend, that's because I've had to look these things up. I'm like, Mike, please explain mutual fund. I don't understand. What do you mean by what is this stuff? What is PE ratio? What is it? I didn't understand this stuff. So we're trying to make this really, really simple. Yeah, steps to move forward. We'll talk about that here in a second. Mike, do you want to finish real quick?
Yeah. Yeah, if you stay in this long enough, you should easily be able to get 25% as the goal. And even sometimes in recessions, I'll give you an example, 2022. Okay. If anyone remembers the big pullback, interest rates are going up. We're at, Russia's at war again and all this stuff's going on. The market sucked that year. Well, I got myself and people invested with me into Campbell's Soup. In 2022, Campbell Soup did 30%. So the market's drop in 20, we're up doing 30. Now, is that going to be every single time? No. But the goal is that even in hard times, my goal is to rotate you guys into the best performing companies and funds that will give you the best returns. So if you stay with us long enough, 25% should be like laughable. You should be able to blink and do 25% long term as the goal. Okay. And so the goal is to learn from me. I've cut my teeth at this. God, what are we now? 17 years, I guess. It's been a long road, a fun road. I've learned the mistakes, and I want you guys to learn, from my mistakes and skip my mistakes and get into some super, uber duper big wealth building.
Awesome.
Yeah,
Mike, thank you so much.
you
We
are
all
welcome.
huge thank you. Guys, this is software. This is stuff that nobody else is offering. I promise you. Okay. We
Yeah,
even dabbled with M1 about a year ago and it was good, but it wasn't great. And this is great. What Mike has rolled out is truly revolutionary. I don't know any other financial coaching or advising, any other kind of company that's offering this. And yeah, I am just absolutely floored and stunned to be able to roll this out for you guys. And so yeah, especially how many of you guys still have double digit interest on credit cards or things like that? This is how you can get take your debt and make double digit returns. And this is also where, if you guys will see, we've definitely pivoted a little bit in terms of where we like to place our focus. As much as I love for you guys to be debt free, I was talking about someone like this with this earlier. I think the baby steps and things like that are a good concept to be able to roll out to some people. But here's the truth. I've been coaching for many, many years, thousands of people, and Mike has seen it too. The people that wait to get into the investing game until they're debt free, until they have their $50,000 in their savings account, they never get into it. And I kept getting clients that were coming to me in their, 50s, 60s that had been investing consistently, like we're talking about, and still had some debt. But it's like, okay, you're a millionaire, you're going to be okay. But people are waiting, like, well, once I get my debt, once I have my $1,000, then once I get my, no, guys, you don't need to wait. If you can get 20, if you can get even just 12% returns, which we didn't really talk about that, guys, there's ETFs right now that have a 12% track record for
yeah,
10, whatever years. Okay. You could go do that right now. But if you could get 15, 20, 25%, why are you freaking out about a debt that's at 5% interest? Okay. So I would encourage you guys as we get a little bit more into this whole process, you're learning how to do this, get in the game. I don't care what debt you have. Obviously, we have Kingdom Debt Solutions and opportunities. If you have double digit kind of debt and you want to negotiate that down, one of the things that we're doing, even on that side of the business, is showing people, hey, if we could help negotiate the debt down, now you're saving $500 a month or $1,000 a month. You
yeah,
take the same amount of money. I just did a presentation on this that I could show you guys here in a second. I was actually gonna email this out, but I could tell you guys now. We're building out a special calculator for this as well. But if you took the same amount of money, okay, the same amount of money that you were putting toward your minimum payments, and you started taking that money, now that you're saving that, you've negotiated your payments down, you're working on that monthly, okay, and you took that and you invested it, every single person here could become a millionaire in the next in the next 10,
yeah.
20 years. I had one of my clients I was looking at, she had $60,000. She enrolled with us or so with Kingdom Debt Solutions, and we helped her with the credit card, personal loan debt, negotiate that down. And we took a look at it. We're like, okay, what if we could get her 25%? After 15 years, that was 2.2 million. And after 16 years, that was, or sorry, after 20 years, it was $7 million. And that was literally with her putting, that was making no extra money. That was with not like scrimping and cutting costs anywhere else. That was literally taking the money that she was putting toward the debt. And now that she's saving on her monthly payment, taking that difference, investing it, and then when she was out of the program, taking that program payment and putting it toward investing instead. Does that make sense, everybody? And again, 25% doesn't have to be where you stop. What about 60%? We have other things that we have real estate stuff that's doing great in the 20s, even 30s. We've got other investments in the 60s. Mike's going to come back and show us how many of you guys are excited for that training, right? How to be able to do the ETF trading like he's doing. But yeah, when we looked at a 60% return, is like, yeah, after 20 years, if she could do that, it was $371 million, right? So I don't care how far into life you are, how behind you might feel, how broke you might feel. Anybody here can start with even 50 bucks, $100, $200 or something and just get in the game. You guys excited for that? Okay, cool.